Remember when Trump talked about tariffs on everything? It was a sweeping declaration that had everyone on edge. Cars, medicine, you name it. The idea was to impose tariffs across a wide range of industries, affecting countless products that Americans use daily. It felt like a trade war was about to explode. Markets were jittery, and there were protests against what many saw as an impending economic disaster. Well, hold your horses. The Trump administration just announced a change of plans. Instead of broad tariffs, they're shifting gears. Instead of going after entire industries, they're taking aim at specific countries. This new strategy is more focused and precise, 15 of them to be exact. These countries have been singled out for their trade practices. These countries, nicknamed the Dirty 15 by Trump's Treasury Secretary, are accused of unfair trade practices. The administration believes these nations are taking advantage of the U.S. think big trade imbalances with the U.S. These imbalances are seen as detrimental to the American economy. We're talking China, Japan, India, some major players in the global economy. These countries have significant trade relationships with the U.S. This shift, from industry-wide tariffs to a more focused approach, has everyone talking. Analysts are debating the potential impacts and effectiveness of this strategy. Is this a sign of softening from the Trump administration, or is it a calculated move to apply pressure where it hurts the most? Or a shrewd tactical maneuver? The administration might be playing a strategic game, aiming for long-term gains. One thing's for sure, the global trade landscape just got a whole lot more interesting. This new approach could reshape international trade dynamics. This new plan is a big departure from Trump's earlier threats to slap tariffs on goods from all over the place. It's a more nuanced approach. Remember those threats to put tariffs on cars from Europe? Those were part of the initial broad-stroke strategy. Those seem like a distant memory now. The focus has shifted significantly. The big question now is whether this targeted approach will be enough to satisfy Trump's desire for fairer trade deals. Will it bring the desired results? And what will be the impact on American consumers and businesses? Only time will tell. The stakes are high and the outcome's uncertain. So, how exactly do these new tariffs work? What's the mechanism behind them? And why are they being implemented now? It's all about something called reciprocal duties. These duties are essentially a tit-for-tat strategy in international trade. Think of it like this: if country A puts a 10% tariff on goods from the US will slap a 10% tariff on goods from country A. It's a way to ensure that trade terms are balanced and fair. You charge me, I charge you, you scratch my back, I'll scratch yours. This reciprocal approach aims to create a sense of fairness and mutual respect in trade relations. This approach is designed to pressure those dirty 15 countries into playing fair. These countries have been identified as having unfair trade practices that disadvantage the U.S. The Trump administration argues that these countries have been taking advantage of the U.S. for years. They claim that these nations have been benefiting from one-sided trade deals. They say these nations have used unfair trade practices to boost their own economies at the expense of American jobs and businesses. This has led to factory closures and job losses in the U.S. The hope is that by imposing these reciprocal tariffs, the U.S. can force these countries to lower their own trade barriers. This would ideally lead to more equitable trade conditions. This, in theory, would create a more level playing field for American companies and workers. It's about giving U.S. businesses a fair shot in the global market. However, critics argue that this tit-for-tat approach could backfire. They believe that it might lead to unintended consequences. They worry that it could spark a trade war, hurting businesses and consumers on both sides of the Pacific. The potential for economic disruption is a significant concern. While the Dirty 15 are feeling the heat, there's a big question mark hanging over Canada and Mexico. See, Trump has this habit of changing his mind about tariffs, especially when it comes to our neighbors. Remember the whole NAFTA renegotiation saga? The Trump administration has threatened tariffs on Canadian and Mexican goods in the past, but so far, they haven't pulled the trigger on this new round. Some experts think Trump might be going easy on Canada and Mexico because of the new trade deal, the USMCA, but others aren't so sure. They point out that Trump has a history of using tariffs as a bargaining chip, so even though Canada and Mexico dodged the bullet this time, they might not be in the clear just yet. The uncertainty is making businesses on both sides of the border nervous. They're left wondering if and when the other shoe might drop. Okay, let's talk about the million-dollar question. What does this all mean for the economy? The recent changes in tariffs have left many people scratching their heads, wondering about the potential fallout. The truth is, it's still too early to say for sure. Economists and analysts are working around the clock to predict the outcomes, but the situation remains fluid. The impact of these tariffs will depend on a lot of factors. These include the responses from other countries, the adaptability of businesses, and consumer behavior. How will those dirty 15 countries respond? Their reactions could range from mild adjustments to severe retaliations. Will they retaliate with their own tariffs? If so, we could see a full-blown trade war, which would have far-reaching consequences. And how will American businesses and consumers react to higher prices? Increased costs could lead to reduced spending and lower profit margins for companies. Some economists are worried that these tariffs could slow down economic growth. They fear that the ripple effects could lead to a recession. They argue that higher prices for imported goods could lead to inflation. This would make everyday items more expensive for the average consumer, and that could force the Federal Reserve to raise interest rates, which could make it more expensive for businesses to borrow money and invest. Higher interest rates could also impact consumer loans and mortgages. But other experts are more optimistic. They believe that the economy is resilient enough to withstand these changes. They point out that these new tariffs are much narrower than what Trump was originally talking about. This could mean a more limited impact on the overall economy. They argue that the overall impact on the U.S. economy is likely to be small. In their view, the market will adjust and find a new equilibrium. Only time will tell who's right. The coming months will be crucial in determining the true impact of these tariffs. But one thing's for sure, all eyes will be on the economy in the coming months. Everyone from policymakers to everyday citizens will be watching closely to see how this economic story unfolds. Here's the thing about trade wars. Nobody wins. When one country puts up tariffs, other countries often retaliate with tariffs of their own. It's like a game of chicken, but with the global economy at stake. And guess what? We're already seeing signs of retaliation. China, not one to back down from a fight, has already slapped tariffs on some U.S. goods. The European Union, Canada, and Mexico have also threatened to retaliate if the U.S. doesn't back down. This tit-for-tat escalation could have serious consequences. Higher tariffs could drive up prices for consumers, hurt businesses, and disrupt global supply chains. In a worst-case scenario, it could even trigger a global recession. The big question is whether cooler heads will prevail. Will the U.S. and its trading partners be able to find a way to de-escalate the situation, or are we headed for a full-blown trade war? Section 6. Powell's perspective. A steady hand on the economic tiller. In times of economic uncertainty, people look to the Federal Reserve Chair like a captain navigating a storm. So, what does Jerome Powell, the big cheese at the Fed, think about all this tariff talk? Well, Powell is known for his calm demeanor and measured approach. He hasn't pushed the panic button just yet. In fact, he's said that he thinks the impact of the tariffs on the U.S. economy will likely be small and short-lived. Now, that doesn't mean Powell is thrilled about the tariffs. He's expressed concerns about the potential for unintended consequences like higher prices for consumers and businesses. But Powell is also a pragmatist. He knows that the Fed doesn't control trade policy. His job is to steer the U.S. economy through whatever choppy waters may lie ahead. Section 7. Wall Street weighs in, a cautious sigh of relief. Wall Street, the beating heart of American finance, doesn't like uncertainty. So, how have investors reacted to Trump's tariff twist? The answer, as with most things on Wall Street, is complicated. Initially, when Trump first started talking tough on trade, the stock market threw a bit of a tantrum. Investors were worried about a trade war and the potential damage to the global economy. But when the Trump administration announced the narrower approach, targeting specific countries instead of entire industries, Wall Street seemed to breathe a collective sigh of relief. Stock futures actually rose over the weekend after the announcement. Now, it's important to remember that the stock market is not the economy, but it does reflect the collective wisdom, or lack thereof, of investors. And right now, it seems like investors are cautiously optimistic that this tariff situation won't spiral out of control. Section 8. The global chessboard: trade tensions in a complex world. To understand what's happening with these tariffs, you gotta look at the bigger picture. We live in a complex, interconnected world. Countries are constantly jockeying for position, trying to get the best deal for themselves. Trade is a big part of that. The US, despite what you might hear, isn't the only country that plays hardball on trade. China, the European Union, Japan, they all have their own interests and strategies, and they're not afraid to use tariffs and other trade barriers to protect their own industries and workers. So when Trump talks about unfair trade practices, he's not entirely wrong. The global trading system is far from perfect. But the question is whether these tariffs are the right way to address those imbalances. Some argue that the US should be working with its allies to reform the global trading system from within. Others say that a more confrontational approach is necessary to force other countries to play fair. Section 9. The road ahead. Navigating the uncertain terrain of trade. So, what's next in this tariff saga? Honestly, your guess is as good as mine. The Trump administration has shown that it's not afraid to shake things up on trade, and other countries have shown that they're not going to back down without a fight. The coming months will be crucial. Will the US and its trading partners be able to find a way to de-escalate the situation, or will we see a full-blown trade war that damages the global economy? One thing's for sure, this is a story that's far from over. Buckle up, folks, it's going to be a bumpy ride.